In the 1920s, the world seemed to be living through one of the most extraordinary moments in modern history. The economy was growing rapidly, businesses were expanding without limits, and millions of people believed the future would bring nothing but prosperity. In the United States, cities were rising, factories were producing more than ever before, and money was moving faster than the world had ever seen. At the center of this new era was the stock market. The stock market became the symbol of wealth and opportunity. People from all social classes began investing their money, convinced that growth would continue forever. It was not only the rich. Workers, employees, merchants, and entire families began buying stocks, believing it was the fastest way to secure their future. Every day, the market rose higher. Stock prices increased constantly. Profits seemed inevitable, and confidence grew without limits. Stories of people becoming rich in a short time spread everywhere. This environment created a collective sense of security. People began to believe the market would never fall, that the system was strong, and that growth was permanent. But beneath this prosperity, there was an invisible weakness. Many people were not investing their own money. They borrowed from banks, used credit, and risked everything for the promise of wealth. This system allowed rapid growth, but it also made the market extremely fragile. Everything depended on one thing: confidence. In October 1929, something began to change. Some investors started selling their stocks. At first, it did not seem important. But when the market stopped rising, confidence began to weaken. More people began to feel fear. More people began to sell. And when fear enters the system, balance begins to break. On October 24th, 1929, a day that would become known as Black Thursday, panic began to spread. Millions of shares were put up for sale, but there were not enough buyers. Prices began to fall rapidly, and the market entered chaos. Desperate people tried to sell their investments, but with every passing minute, value disappeared. This was only the beginning. 5 days later, on October 29th, 1929, the collapse reached its peak. This day would be remembered as Black Tuesday. The market collapsed completely. Fortunes that had taken years to build disappeared in a matter of hours. People who had trusted the system lost everything. The impact was devastating. Banks began to fail because they could not return money to their customers. Businesses closed. Factories stopped producing. Millions of people lost their jobs. Entire families lost their homes. And the world entered one of the worst economic crises in history. This event marked the beginning of the Great Depression, a crisis that would last for years and permanently change the financial system. It showed the world that money is not just paper or numbers. Money is trust. And when trust disappears, the entire system can collapse. The collapse of 1929 left a lesson that remains relevant today. The modern economy still depends on trust. Banks, markets, and money function because people believe in them. But history has shown that trust can change quickly, and when it does, the impact can transform the entire world. This is the story of one of the most important moments in financial history. A moment that revealed the power of money, the power of trust, and the danger of losing both.